Hello everyone, this is Ross with Market Traders Daily, and this is today's video analysis for April 6, 2020. Today we're taking a look at the EURUSD, the euro versus the US dollar for today's trade analysis. Three different trends we've seen over the past several weeks. We have seen the black trend line where the market took a significant downfall for the euro dollar, pressuring all the way down to the lowest low into the mid to low 106s. Then over the past couple of weeks, a little bit of a rebound as the euro dollar went back up from the low back into the mid 111s, the blue trend line. And then last week we saw the market just turn right back around and go back down. The euro dollar falling from the 111.50 level all the way back now into the 107.85 level. So past 2 weeks, 1 week up, 1 week down. Previous couple of weeks before that, significant downfall. US dollar continues to rise since last week. A rising dollar puts some bearish pressure on the euro dollar. If the US dollar continues to rally and go up today, then this week I would expect the euro dollar to continue to make new lows here as it continues to go down. We'll have to wait and see how the week plays out. But currently, the market's still showing some bearish action under resistance. I'm looking at 108.10, 108.25, which is the yellow shaded area down here towards the bottom of the chart, near the current market price, bottom of the red trend line. Something else interesting about that, taking Fibonacci of the blue trend. So 2 weeks ago, the blue trend line, lowest low to the most recent high that we see, puts the 0.618 Fibonacci retracement level just above the yellow zone. So we are currently underneath the 618 of the blue trend line, underneath the yellow zone, and underneath the red trend line. All of that pointing to continued bearish moves as long as it stays underneath there. The risk is, of course, it breaks back above the yellow zone, the red trend line, the 618 Fibonacci retracement level, and turns around and goes up. So as long as it stays underneath there, I think we continue to focus our efforts on being short on the euro dollar. Continued rise of the USD means short euro dollar. So we're looking for trade setups that agree with that. Let's take it down here to the 4-hour time frame here on the euro dollar, and you can see currently we are holding underneath that yellow shaded area as resistance since market open, 108.10, 108.25. So as long as it again stays under the fib, the 618 fib of the blue trend, the yellow shaded area and the red trend line, I think we can continue to focus our efforts on being short on the euro dollar at the most favorable point. Where's the lowest risk, highest reward opportunity? Right now, the lowest risk is selling as close as possible to the yellow shaded area with our stop loss just above it. So that way, if it does change its mind, change its trajectory, and gets back above the 618 fib, yellow shaded area, red trend line, then that's our risk, and we can get out and limit the potential impact to our trading account. It's possible that this yellow zone might be a little bit 5 pips higher, 108.15, 108.30, but either way you look at it, it just needs to be underneath this area before we take a short, and as long as it stays underneath there, that's our directional focus. Of course, we'd love to see on the day if it's going to continue to go down, the breakdown of our last support, the pink zone, 107.85, 80 area, and of course the next target would be down towards the 107 level, which is the blue shaded area down here, or lower. Of course, the blue zone is our first target on the way back down through the pink zone. Then, of course, the green zone down into the mid 106s would be the next target, and down beyond there. We'll look at that later on during the trade room. A couple of things to think about as we go through our week this week. What's the USD going to do? Will it continue to rise along this blue trend line like it did last week, targeting back up into the mid to upper 101s or even higher? And I say the mid 101s because we're looking at the red trend line here on the US dollar. Red trend line, 618 Fibonacci retracement level of that lives up here near this little blue shaded area right there. So there's the 618 fib of that red trend line. So if it continues to go there, again, that puts that bearish pressure on the euro dollar. That's the USD. Bring it back to the euro dollar. I do want to take a look at also our volume indicator. Taking a look from 4-hour time frame down. 4-hour time frame is bearish. 1-hour time frame is turned bearish. 30-minute time frame is bearish. 15-minute time frame is bearish, and the 5-minute time frame just now rolling over to be bearish for the euro dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.